2015. The story is quite different for Thailand. For Thailand, you have a higher growth this year and next year even higher. Story of Indonesia, the same. People can ask the question, Vietnam is slowing down. When other countries going faster compared to Vietnam? So why to invest in Vietnam when the Vietnam economy going slowly? So I have to say that GDP is just one number. We have slower growth because of mining and agriculture, which is the two sectors that pull down the GDP of Vietnam. You know that 20% of Vietnam budget come from oil exploitation. And because the oil price going down too much, we have to cut down the production of crude oil. Agriculture, because of El Nino, and because of as I have to say that because of Mekong River was cut in the north. In the north. So the water from the north, like from China, from Laos, do not go through Mekong River in the river delta in the south of Vietnam this year. So the agriculture of Vietnam have a huge impact by both El Nino and the river delta. We did not receive enough water from the north. So this is the reason why GDP of Vietnam go quite slowly in 2016. But saying that, other sector of Vietnam has very good growth, including manufacturing and construction. I know that yesterday you come to see Vin Group home, and you will see that they have a lot of big project, a huge project in both the south and the north of Vietnam. Because of the property market is so good, I mean the construction market is very good. That's why the company that produce construction materials has very high growth this year, and probably next year will save. Regarding to manufacturing, we are quite depending on FDI, on manufacturing. For example, Samsung and LG, they invest for Samsung they invest more than $3 billion last year. And this year, LG, they invest around $2 billion to Vietnam. This is just the first money of Samsung and LG. Other company from foreign company, they come to invest in Vietnam too. And each year we have around $11 billion from foreign investment. So this is one of the key factors that drive the manufacturing and construction sector in Vietnam. You may see that the PMI index, where we can compare country by country, PMI index of Vietnam had 10 months above 50, which is quite different from other countries, especially like China. 10 months of expansion. And industrial production index of Vietnam in October has a growth rate of 18%. It's 21.8%, which is the highest in 3 years. I mean, just look at the GDP number, does not tell the story about which sector has high growth in Vietnam, which is the different. Mining, agriculture, slow growth, but other sectors like manufacturing and construction, we are still have a sustainable growth. So that's why I come to the main part of today, that I say that the stock and the company we should focus on mainly on the sector like infrastructure, construction material, and some of the defensive sector like pharmaceutical. Okay, this is the main point. I talk directly to the company because I have an order from the organizer that I have to say short about macroeconomy, because assuming most of you know about Vietnam very much. So now I have to focus on the company. The first company I want to talk is I have to say the ticker. The ticker is easier for us and for me to remember and to speak. CTI. CTI, they focus on the project. I think you don't have to write, but later on I will send to you all over my slide. Just focus on the presenter. CTI is for company, they invest in BOT project, which is a road. They invest to building road and they collect fee from that road in the duration of 10 to 15 years. And those projects, because these projects are supported by the government. This is a policy of government to promote private investment in infrastructure. Because of the budget deficit, the government do not have enough money to invest in infrastructure. So they have to promote private investment. And CTI, they took advantage of this policy and they invest very quickly. In just 2 years, they got around 4 toll free. They got 4 road already, they built 4 road and they collect fee from this. This road ensure a very sustainable cash flow for the company. And because you know that, from time to time, when the number of vehicles on the road increase, the fee increase, so the revenue and profit of the company will increase. Not only to say that, in the coming time, they have 3 more roads to complete, which means that in the future, the growth of the very short, in the very near-term future of CTI will be very high. Because like, for example, this year, when they come to have 2 new roads, the earning of this road will come to this year compared to last year they don't have. That means very high growth this year. Next year they will have 2 more roads to complete, which means the high growth of the company. And you know that investing in a company, like my own experience, local investor, foreign investor, like most of us prefer a company with high growth. High growth means that 20 years growth of earning is very high. This company, you may see that the earning of this is the estimate of the first 3 quarters. Earning growth of this company is around 52% already, which is very high. In Q4, the growth of the company, earning growth can be even higher because they have they just complete a new road and that road will generate revenue from Q4. Why we will think that PE of this company is just 10 times EPS, and this company have 60% cash dividend. 60% is based on the par value. Par value means 60% is equivalent to 1,600 Vietnamese dong per share, and this can translate to around like 7 to 8% dividend yield a year for this company. So this company, because of the strong cash flow, because they collect money almost every day when the vehicle pass through their toll fee collection, they collect the money, and each day they can get 1 billion, 2 billion very easy. And because of the strong cash flow, they can pay dividend. They ensure they can pay dividend each year. And you can see that the valuation of this company is just 10 times. Compared to the stock market of Vietnam, it's now 16 times PE. So it's a little bit cheaper than market. But however, we usually don't compare a company to a stock market to say that this PE should be 16. No, I don't say that. I just say that this company, because of the high growth, you may see that 50% growth of earning, very high. And this year, if they maintain a growth rate of like around just 30%, the PE will go down to around 7 PE. quite cheap. This is very cheap. And this company, there are several foreign institutional investor already invest in this company, including Vina Capital, if you heard about that. Vina Capital is a long-standing fund in Vietnam. Yeah. And this is the first company. This company invests in BOT. However, they have one of the assets that they do not use, which is the stone mine. Stone mine. They have 3 stone mines in the south of Vietnam. The south of Vietnam is different from the north. That means the south of Vietnam is the delta. We have limited resource for stone. The north, you can see a lot of mountain, stone mountain around the area. But in the south, very limited. When they own a stone mine, they can use it anytime when the construction work pick up in the region. However, they do not use it yet. They plan to use the stone mine from 2018, which is the time of the construction of a new airport in the south, which is Long Thành Airport. It's a huge project of Vietnam in 2015, and it will require a lot of construction material. And this stone mine of CTI are located very near to Long Thành Airport. It's quite convenient for them to use the stone mine to supply to Long Thành Airport. But you will know that the investment capital to Long Thành Airport is more than 10 billion US dollar. That's a huge. The Long Thành Airport will replace Tân Sơn Nhất Airport to be an international airport in the south of Vietnam. So the first company, CTI, I see this is not only a term growth, but the long-term growth of CTI is still very attractive. So this is one of the company I very favor. The next one, Hòa Phát, HPG. Hòa Phát is the biggest steel producer of Vietnam, which has more than 20% market share in steel market. They invest in the whole value chain, starting from produce steel, and they starting from iron ore and ending at the distribution to construction market. So this is one of the 2 companies that have the whole value chain of steel production. The other company is a state-owned company, but they do not perform well. Because it's state-owned company, so usually the effectiveness of the state-owned company is not so high. So that's why Hòa Phát can get the very high market share. Hòa Phát, because of they invest in the whole value chain, they reduce the production cost, and this is one of the cheapest steel in the market, and can compete with Chinese steel in terms of price in the past. However, this year, from the beginning of this year, because of the Chinese steel, they dumped the price so much. Though the government of Vietnam decided to apply the anti-dumping price to Chinese steel. And this is a strong catalyst for Hòa Phát to have a high growth in this year, because they do not have to compete to Chinese product anymore. And probably next year and the years so on, we will ban Chinese steel to import to Vietnam. Beside of steel business, Hòa Phát are investing in other business also. This is a conglomerate. They used to have a furniture segment, but this one is small. They just produce a small revenue and earning. Now Hòa Phát investing a new business is the it's a coated steel sheet. It's like a roof. You mean that you need a roof to cover the house. So this segment usually belongs to another company in the south, and other company like FDI company to produce. And Hòa Phát, they have not produced this one yet. However, Hòa Phát, when they see the opportunity in this segment, they start to invest. And because they have a very good distribution network, they have a good brand name, it's very easy for them to marketing and to sell this product, especially for them when they have a very low production cost. This coated steel should have the first capacity of 400,000 tons, where enough to cover the north of Vietnam. The biggest market share of this product belongs to Hoa Sen Group, but Hoa Sen Group just strong at the south and in the middle of Vietnam. In the north of Vietnam, the market quite neutral. I mean, no one has a strong position in the north of Vietnam. So this is a chance for Hòa Phát, because Hòa Phát is located in the north and very strong brand name in the north. Other than that, Hòa Phát also have property business, and this one can produce very quick money and very high earning. Mandarin Garden 2, which is the second project Mandarin have. The first one, Mandarin Garden 1, finished like 4 years, 5 years ago, and they have a profit of 1,000 billion Vietnamese đồng by just that project. And this project, because it's smaller scale, the earning will be around 300 to 400 billion Vietnamese đồng. Hòa Phát, the owner, the chairman of Hòa Phát, he wants to have a good name, a good image by the property segment. That's why he invests very good, and he manage the properties very well. So that's why the demand for this project is very good. And you may know that price of Mandarin Garden 1, when he sell 5 years ago, the price is around like 30 million Vietnamese đồng per square meters. Now the price is more than 50 million Vietnamese đồng per square meter, which is up around more than 60% already in just 4 years. Property price. Other than that, Hòa Phát also invests in animal feed, because the livestock growing in Vietnam keep growing, and because of the awareness of farmer about the goodness of using industrial feed other than the feed that produced by themselves. So this segment is still growing, and more companies invest in animal feed segment. And this company will this segment will generate profit from 2018, which is 2 years later. So this company, the story of this company is not just for this year, can be the next year and the years after that, because they invest in different business, and this is quite potential. It's very potential, and the chairman of this company is very talented compared to any other businessman in Vietnam. He's very successful in almost any business he invests. Still, he's the number one. Property market is get a very good brand name and very good profit from those property market. And for coated steel business, I'm quite sure he can get share and can generate profit. And on top of that, the valuation of Hòa Phát is very cheap in this year. Next year, because of the growth, is even cheaper. Saying so, Hòa Phát is a market leader. Hòa Phát is a market leader in steel business. Hòa Phát is the one of the blue chip in the Vietnam stock market, and is very favored by foreign investors. Because of that, I don't know why the market still have valued the company which is so cheap like this. So the price of Hòa Phát increased like almost double in this year already. Increased double because the price go too high, so people do not buy it anymore. Even earning growth catch up with the price of the company. but people are still a little bit scared when we buy, any other investor can take profit. And actually, this company, the price went down around 10% in this month after a long period of going up since the beginning of the year. So after 10% correction, the price of Alpha they start to get quite sustainable because it goes sideways around like 40,000 Vietnamese đồng per share. At that price, the valuation is so cheap, and we can wait for when the market see the growth story of our fab again, and we can buy. This is the time for the price to go up. This time we have to wait. We cannot buy because the price just correct for 3 weeks. It's not enough, like any investor, like we say. After 3 weeks, it's not enough for us to buy. We have to wait more. So this is a story of Hòa Phát. Hòa Phát is good both for short-term and long-term investment. The third company I want to talk to is the company in industrial park. Long Ho Industrial Park is a company that invests in industrial zone in the south of Vietnam, located in Long Ho province. Long Ho province in Long An province. Long An province is next to Ho Chi Minh City, and the industrial zone of Long Ho is even closer to Ho Chi Minh City because it's just next to the border with Ho Chi Minh City. And you may have the Phú Mỹ Hưng new urban area. It takes just 10 minutes to go from Phú Mỹ Hưng to Long Ho industrial zone. It's very close to Ho Chi Minh and it's very convenient. The last time when I go from the downtown of Ho Chi Minh City to Long Ho industrial zone, it takes only 40 minutes by car. Because of their good location, the rental price of this industrial zone is high, from 90 to 100 US dollar per square meter. And this company, they are going to develop a third phase of landing where they have around 100 hectares of land. Of that, 80 hectares will for rent. And the remaining land of Long Ho province surrounding of this industrial zone, the remaining is 900 hectares, which is enough for them to have the fourth, the fifth, or the sixth phase of expansion. So this time it depends. Industrial zone is depending on the flow of FDI and investors to come. And because of their good location, this industrial zone, they positioning themselves as a clean and green industrial zone, which is they do not allow investor to have a high pollution. So that's why Japanese and Korean investor prefer this industrial zone rather than other industrial zone, and they accept to pay higher price to rent in this industrial zone. This company also have very low PE, just 8 times of PE. Which is lower than other industrial zone company also listed in the stock market, which is KBC like 11, ATA like almost 50 times of PE. So this company, they have both short-term, they have a good attraction of low valuation, and they also have a good attraction of growth in next year. Because of the phase 3 of new industrial zone will start to rent next year in the first half of next year. And by that, this one they have a very strong cash flow. They have when investor come to pay the renter, they pay a lump sum. I mean, when they rent the land for 50 years, but they pay the money in just 3 years, which is quite similar to the business like insurance or other. they have a huge lump sum amount of money, so they use that amount of money to invest, and they have a finance and income. So this one have very good potential, strong cash flow, a lot of assets behind low valuation. This company should be considered. One of the problems of this company is because of the policy risk. I have to say that policy risk. I mean, the law of Vietnam this year requires that when they receive a lump sum from investor, they will have to pay the land fee to the government as a lump sum. I mean, in the past, they receive a lump sum from investor, but they pay annuity to the government in 50 years, a long length. That's why they have a huge cash at hand. But from this year, the government requires them to pay the government the whole lump sum. I mean, the cash at hand of this company will reduce quite a lot, and they have to sell their financial investment. They have to sell some of their investment to get the money to pay for the government. So this is one of the risks of the company, and that's why the valuation of the company is lower compared to the market. Saying so, when this risk become clear, that means when they pay all the cash, so all the risks will be clear, and the potential of company is still there. One of the main shareholder of Long Ho Industrial Park is IPC. IPC is a state-owned company by Ho Chi Minh government, Ho Chi Minh Authority. This IPC invests in 3 industrial zones. One of that is the industrial zone, which is very big. And this IPC has a long history. It's the first company set up by Ho Chi Minh Authority to invest in industrial zone and to attract FDI to Vietnam. It performed like an authority, like a Singapore a long time ago. When Singapore want to attract FDI, they set up an organization. And Ho Chi Minh City, because they are the first to attract FDI, they set up IPC. And because of 49% owned by IPC, this company will have a very sustainable management team and have a good support from Ho Chi Minh Authority. Quite different from other industrial zone company. Other company are mostly private company, and because of that, corporate governance or cash dividend is not sustainable. This company pay cash dividend almost every year. Other company, I don't know about that, but I'm quite sure this one is the company very committed to pay cash dividend because IPC need cash from those companies. So I finished the 3rd one. I come to the 4th one. Tobacco Group. Tobacco mainly focus on livestock feed. And as I mentioned before, this is a fast-growing sector of Vietnam because of the awareness of farmers about the quality of the feed they use for the animal. The livestock feed segment. I don't know about Thailand, but in Vietnam, CP Group is the #1. CP Group has the biggest market share in Vietnam. The second one, other company, and tobacco, they do not have a strong, they do not top 3 or top 5 market share. This one have a long history of Vietnam, and they keep growing this one. So tobacco, the story of tobacco is the growth of the earning, and the story also about the low valuation. The PE of this year is estimated at 9 times PE, which is quite reasonable. And next year the PE can be lower because of the growth of the earning. And Tobacco used to have business in property development, but because of the property development in the province other than Hanoi is not easy, because the demand for property is low in other provinces beyond Hanoi. They decide to divest this business, including industrial zone and resident real estate. So by that, they receive a certain amount of cash, and also they reduce the total assets of the company. When they turn to focus on their main business, this one have a long history. The company used to be a state-owned company. Used to be a state-owned company focused on livestock feed industry. And after the IPO, the CEO of the company became the chairman, and now he owns the company. This company is very favored by SSI for a long time. Maybe later on, our team from SIM will tell about that. The last one I want to tell about, the first one, the last one is about pharmaceutical. Pharmaceutical is something about, you can say it's a very defensive sector. Defensive sector does not mean it do not have growth. In Vietnam, because of the penetration and the amount of the money that people spend on medicine is very low. And from now on, this company, they invest in new medicine, and they have very good growth of this year. Pharmaceutical usually have a high valuation, which is high PE. But for this company, the PE of the company is quite low, just 12 times of the PE, and next year is lower. This company have a good efficiency in terms of gross profit margin compared to other peers, which is the gross profit margin of this company is like almost 45% compared to other big company listed pharmaceutical company is not more than 40%. The story of this company, not only because it's a very good brand name in the market. The story of this company is about the foreign limit, room for foreign investment. Now the room for this company is 49% already, which is it's hard to say about how good the company is. But to say that foreign investor buy all the room for this company and keep their holding for quite a long time. So other foreign investors cannot buy. And if other foreign investors want to buy, they have to buy at the premium. This is one of the evidence that this company is a good company. Usually foreign investor and institutional foreign investor, they keep the stock for quite a long time. This company also pay cash dividend very sustainably. And the main story behind this company is that they are going to open the room for foreign investment. If one of the first pharmaceutical company success, this is Domesco, DMC. Domesco is also a pharmaceutical company. This is the first pharmaceutical company apply to remove the limit on foreign investment. So if DMC, Domesco success, the whole DHE will follow, and they will, when they follow, they will increase the room to 100%. And from that on, because the foreign investors start to buy, the price can go up, and it's a chance for you to buy. And pharmaceutical saying so is a defense. In other countries like US or EU, it can be a defensive sector because it's very sustainable in any cycle of the economy. But in Vietnam, sometimes this company, they have a very good upside, that means in the short term. the price of the price of EHG in just 2 months, in just 2 months, increased like 20%, right? After quite a long time of go sideways, it started going up with the market, and this company went to invest very how to say, it's very when we can be very confident to invest in company because it's a very long history. This one used to be a state-owned company, also very long history, very good market share and strong cash flow and strong dividend. And the main catalyst in the short term is when they remove the limit on foreign investment. So coming to this company, I finished my presentation here, so I will give now the time for Q&A. You can ask me any question about the market, about the macroeconomy, or about